So in this follow-on lecture we're going to look at how the T accounts can help us complete missing figures for when we've got incomplete records. So first of all we're going to look at the cash and bank account. Now in this section we have to be quite clear about the distinction between cash and banks. Cash is the amount of notes and coins in the till or the petty cash tin. A bank account is the amount held in a current account or a cheque account of the business. If the opening and closing balances of the cash and the bank are known together, with most of the movements in and out, then if there is only one missing figure, this can be found as the balancing figure. So looking at a cash account example, so when dealing with incomplete records, a cash account deals literally with cash either from the petty cash box or more usually from the till in a small retail business. If the opening balance and the closing balance of the cash is known, then provided there is only one missing figure, this can be determined from a summarised cash account. So if we have a look at the question below dealing with Henry, so Henry's sales are all for cash. During the year he banked £50,000. He paid wages of £5,000 out of the till and paid expenses in cash of £10,000. There was no opening or closing cash balances. So what would be Henry's sales? So if we draw up a T account dealing with this, so we're going to have a cash account, and it says that there was no opening or closing, so the balance brought down is 0. The balance to carry down is also 0. We're then told that we banked 50,000, so that would be going out of the petty cash tin into the bank account, so it would be a credit to the cash account for 50,000. It then says we paid wages of 5,000 out of the till. Again, that's reducing the cash account, so it's a credit entry. So we've got some cash wages of 5,000. And then we've got some cash expenses, also a credit to the cash account of 10,000. So now if we were to balance up the account, we find that the total of the credit entries are 65,000. So the total of the debit entries must also be 65,000. This is not a normal balance to carry down, it's where the income has come from or the cash has come from. And so the assumption is in this case it must have come from cash sales, as Henry's sales are all for cash and there's nothing else in the question to suggest where this cash could have come from. So now dealing with the bank account, so exactly the same ideas as we dealt with the cash account can be dealt with in the bank account. So if the opening and closing balances and the transactions all except one are known, then the missing figure can be found. However, in practice this may not be required because you can always get your bank statements or a copy of your bank statements back from the bank, and that will show all the necessary details. So remember, the double entry for bankings is to debit the bank account, so put money into the bank account, and credit the cash account to reduce the petty cash tin. So if we have a look again at Henry, so Henry writes cheques only for his own use. He knows that his bankings were 50,000. The opening and closing bank were 10,000 and 40,000 respectively, so we need to calculate what his drawings were. So again, opening up a T account for the bank. So this would be an asset, so the balance brought down is on the debit side. And we know that the opening balance was 10,000. We're also then told that we have a closing balance, so that would be a balance to carry down from the credit side of 40,000. And then we're told also that he knows that he banked from his petty cash tin, from his till, that he banked 50,000. So we've got some bankings from the cash account of 50,000. So now if we were to balance up the account, we'd see that we've got a total of 60,000 on the debit side. We need to make the credit side equal, and so in this case our missing figure is 20,000, and so that must be what he actually took for his own use in drawings. It is often easier to combine the cash and the bank accounts into one ledger account with a column for each of the cash and the bank shown separately. In the case of Henry, this would be written as follows, and you can have a look and see then in the actual cash and bank account working below how all that information from our previous two separate accounts are actually kept within the single bank account, cash account working. So a second scenario dealing with our T accounts is to actually use the sales ledger control or the purchase ledger control accounts, also known as the trade receivables and trade payables accounts, so that you can establish either the sales figure or the purchases figure. So a technique for finding these missing figures is to recreate the receivables and payables accounts in order to find the missing figures as balancing figures. So if we have a look below, then you can see what a sales ledger control account entries might consist of. So we've got sales coming in from the sales day book, so that would have been a credit to the sales account and a debit here to the trade receivables or sales ledger control. When the customer pays us, this will reduce the amount outstanding, so it will be a credit for any money receives. If there's any sales returns, again this will reduce the sales figure. If there's any irrecoverable debts, so that customers have gone bankrupt, etc., then this will be a credit entry. If we've allowed our customers to settle at a slightly lower amount due to an agreement, then discounts allowed will reduce our sales ledger control. And there may also be a situation where both a customer is also a supplier, so rather than have payments go in both directions, we'll actually just make a contra with the trade payables or the purchase ledger control account to reduce the amount that's owed on the sales. So if the opening and closing receivables are known together with any of those other entries, then it's possible that we can actually find the sales figure as a missing figure as a balancing item. So looking at the small example below, so we have a business has receivables at the start of the year of 4,220, and at the end of the year the receivables are 4,870, after accounting for a contra with the trade payables as given below. So during the year the customers paid a total of 156,350, and there's a debt of 1,000 which is irrecoverable. In addition, an agreed amount of 2,000 which is due from a credit customer was offset against a trade payable amount due to that same customer also being a supplier. So we're after the sales figure for the year. So if we have a look at the information that's been put into the account then, so we've got an opening balance of 4,220. We've got the closing balance to put on the credit side of 4,870. And we know that we've got receipts from customers that have paid 156,350. That will then reduce the amount that's owed from our credit customers, as will the fact that we've got a debt which has been considered irrecoverable, so that will reduce the amount that's owed from the customers because that's no longer collectible. And we've got a customer that's also a supplier, so we have offset with the trade payable account, the purchase ledger control account, the £2,000 that's due. So now if we actually total up both sides of the account, so on the credit side we've got 164,220, force the debit side to equal, and then we find that the missing sales figure is 160,000 in this particular instance. So the purchase ledger control account or the trade payable account works in exactly the same way if we're trying to establish the missing figure for a purchases. So we have on the debit side any payments to suppliers to reduce liabilities. If there's a discount received, again that will reduce our liability. purchase returns will also reduce it, and also the contras with any trade receivables where we have a customer that's also a supplier. On the credit side, we're going to usually have an opening balance together with the credit entry from the purchase day book to show the purchases figure. So if we have a look at the short example below, then dealing with Dominic. So Dominic paid his payables of £5,000 during a particular period. At the beginning of the period, he owed £1,500, and at the end he owed just £750, after accounting for a contra entry that's given below. So Dominic has agreed to contra an amount of £250, which was owed to a supplier who is also a credit customer. So we're going to try to establish what was his purchases for the period. So again, drawing up a T account. So we're going to have for the trade payables. So we know that he paid his payables £5,000. So either coming out of the bank account or out of cash, he paid £5,000. So that would be a credit to the bank or the cash account to reduce it, and a debit to the trade payables to reduce your liability. We know that at the beginning of the year he owed £1,500, so we have a balance carried down on the credit side as a liability of £1,500. And we know that at the end of the period he had a balance to carry down to next period of £750. So looking at the other entry we've got then, so we're also told that we've got a contra with the trade receivables, so this will reduce a liability, so the contra goes on to the debit side, and a contra being £250. So at this point then we can now balance off the account. So our debit side is greater, so debit side is 6,000. So we need to make the credit side also equal 6,000. We currently have 1,500 sitting on the credit side, so we have a missing figure of 4,500, which relates to an entry from the purchases day book. So we've established that our purchases figure being our missing figure of £4,500. However, in many of the incomplete records questions that you'll come across, you will need to combine the various techniques that we've looked at so far. So you might also need to use a cash and bank account in order to determine the receipts from customers and transfer this amount into the sales ledger control account in order then to find the sales figure. Similarly, you may have to calculate information from a cash or bank that looks at the purchases. So if we have a look at the Andrea question below, so we've got a situation where Andrea doesn't keep a full set of accounting records, but she's been able to provide you with some information about her opening and closing balances for the year ending 31st December 2017. So in terms of inventory, we have an opening balance of 5227 and a closing balance of 4892. The trade receivables, so our credit customer balances, so 6387 was the opening balance and 7221 our closing. The trade payables, so the amount that we actually owe to our suppliers at the beginning of the year was 3,859 and at the end of the year is 4,209. In terms of the bank account, we had an opening balance of 1,448 with a closing balance of 1,382. And then money in the cash tin, at the opening of the year it was 450, and at the close of the year it's 300. So Andrea tells you that the trade receivable balances and the trade payable balances at the 31st December 2017 are stated after accounting for a contra entry of £400 to offset an agreed amount due from another business which also supplies her with goods. You've also been provided with a summary of Andrea's payments out of her bank account. So we've got some payments to the trade payables of £48,906. She bought a new car for £12,000 and she's paid some expenses of £14,559. So remember, they've all come out of the bank account. Andrea also tells you that she's taken £100 per week out of the till in order to meet her own expenses. So we have been asked to calculate a sales figure, a purchases figure, a cost of goods sold, and the gross profit for Andrea for the year ending 31st of December 2017. So in order to carry out this, first thing we need to do is actually to open up our ledger accounts for the cash, the bank, the receivables and the payables, and enter into those accounts our opening balances. So if we do that then, so first of all, make sure you give yourself plenty of room. So we're going to have a cash and bank account. So we know that we have some opening and closing balances. So in terms of the opening balance then, so the balance brought down from last time. So the cash has a 450 opening balance and the bank had a 1448. In terms of my closing balances, so the balance to carry down to next time, so from the year end our cash was sitting at 300 and the bank was sitting at 1382. So then we need to carry on then and open up our trade receivables and trade payable account. Again, leave yourself plenty of room just in case. So I want a trade receivables. So remember, this is your sales ledger control account. So it's your customers that owe you money. So the opening balance will be a debit as being an asset. So the balance brought down would be 6,387 and the closing balance would sit on the credit side as a balance to carry down to next period of 7221. And then finally we're going to open up a trade payables account. Again, leave yourself enough room. So this is the purchase ledger control account, so suppliers on credit. So this is a liability, so the opening balance, the balance brought down from last time, would show 3,859 and a balance to carry down as the closing balance would show 4,209. So now we've got our opening balances and closing balances in the accounts, we can then start looking at the entries that need to be put in. So first of all, we've got the information from the question that tells us about what went through the bank account and the cash account. So if we go back to our bank and cash, so we know that she paid some money to our trade payables from the actual bank account, so that would reduce the bank account, so it would be a credit entry. So entry to payables of 48,906. Don't forget to go and complete the double entry, otherwise you'll be creating yourself an error. So we've now put it on the credit side of the bank account, so we need now to go and put it on the debit side of the trade payables account to complete the double entry to reduce the liability. So that's that entry completed. So the next entry that we've got coming out of a bank account is that she paid £12,000 for a car. So again, going to reduce the bank account by £12,000, so with a credit entry, and then that will go and sit in a car cost account ready to put onto the statement of financial position. And then lastly, we have some expenses that's been paid, again from the bank account, and she paid 14,559. So that's dealt with those 3 entries in terms of our bank account. So now we can actually balance off the bank account. There's no other entries that have gone through. So by balancing it off, we can actually find out how much money was paid into the bank account. So totaling the bank account up then. So totaling up the credit side, we have 76,847. We're going to make the debit side equal the same, so 76,847. So the amount that's been banked, which we assume must have come out of the cash tin, would be our balancing figure in this case, so 75,399. So now we know that that's come out of the cash tin. It would be a contra within the own account. So on the credit side, we're going to reduce the cash account with the bank-ins of 75,399. So the other entry that we've got from Andrea, she tells us that she actually makes a drawings figure of £100 a week coming out of the petty cash tin. So if we assume therefore that she actually takes a 52-week year, it will mean then that she has personal drawings coming out of the cash tin of 5,200. And we're now in a position whereby we can actually balance off the cash total. So if we total again up the credit side, we find that we've got 80,899. Make the debit side also equal. And so now our missing figure must be the receipts from sales, as being 80,449. So we're now in a position whereby our cash and bank accounts are completed. So again, remembering to then use those double entry figures, go and complete all of the information that we have. So we have to remember the figures that we're going to put through. So still haven't put the receipts through from our customers, so that will need to be done. So if we have a look then at our trade receivables account, so we put through 80,449 into the bank account, assuming it came from our trade receivables. Not all of our receivables not all of our sales would be for credit, but we're just going to deal with the one figure. So our receipts from customers, so receipts which has gone through the cash account of 80,449. Remember that earlier on Andrea told us that she'd got a contra entry, so this will reduce this amount owing from our customers. So we have a contra of 400. We're now in a position where the only missing figure that we've got is the sales figure. So we can balance off the sales ledger control or the trade receivables account. So balancing this up, so total on the credit side is 88,070. Put this over onto the debit side to force it to equal. And now if we calculate the difference between the 88 and the 6 opening balance, we find that we've got an 81,683 sales figure. Similarly then, we can finish off our trade payables account. So we've put the bankings in, so we need now to put the contra entry through. So we have a contra, remember, of £400. So if we total up our debit side, we find that the total is 53,515. Give this as the total on the credit also. And therefore our missing figure we're assuming is credit purchases, and that will come to 49,656. So we're now in a position whereby we can actually do the trading account. So we've got our sales figure of 81,683. We have our purchases figure of 49,656, and from the question we've got the opening and closing inventory figures as well. So looking at the trading account for Andrea, so we have sales as calculated, we have 81,683 less our cost of sales. So remember from your earlier studies, so this consists of our opening inventory given in the brief of the question, so 5,227. Add to that our purchases figure from our T account above, so we have 49,656. So inventory available for selling is 54,883, and from that we're going to deduct the closing inventory that wasn't sold, which again from the briefing of the question was 4,892. So it meant that our cost of sales figure would be 49,991, and that would result in a gross profit figure of 31,692. So in this example we're dealing with Andrea's accounts. We've dealt with all four of the main accounts, so the cash account, the bank account, the receivables and the payables, simultaneously, so that you can see how they all fit together when we're actually doing incomplete records. Now in the next short video we're going to have a look at markup and margins, which is another one of the techniques that we need to master in order to prepare incomplete records.